Solstice eUSX, trading under the ticker eUSX, is a newly launched digital asset built around the concept of synthetic stable value exposure. According to the project's documentation, eUSX is positioned as a synthetic euro-pegged token designed to operate within the Solstice ecosystem, a platform focused on decentralized derivatives and synthetic asset issuance. The goal is to create euro-denominated liquidity options for users who want exposure to European currency values within a blockchain environment. The Solstice platform aims to provide synthetic currencies and stable value assets using overcollateralization and transparent on-chain issuance. This model mirrors the design used by major synthetic asset protocols, uses locked collateral into smart contracts and mint new tokens that track the value of external assets. For eUSX, the target is the euro. The project claims that the synthetic design allows users to hold euro-equivalent value even while interacting with decentralized finance, without relying on traditional stablecoin custodians or centralized issuers. Based on the project's documentation, the issuance of eUSX is backed by collateral deposited into the Solstice protocol. The system relies on a collateralization ratio intended to protect against volatility, ensuring that the synthetic supply remains backed by more value than it represents. This approach attempts to avoid the risks associated with under-collateralized or algorithmic stable coins, though execution depends heavily on liquidity depth, collateral health, and the reliability of the underlying smart contracts. The Solstice ecosystem markets itself as an expanding platform that supports more than just synthetic euro assets. Its documentation outlines plans for additional synthetic currencies, leveraged positions, and on-chain trading tools. The protocol integrates Oracle feeds to track external prices, allowing synthetic assets like eUSX to mirror real-world value with on-chain updates. However, the robustness of these mechanisms depends on Oracle accuracy, blockchain stability, and the liquidity conditions that support minting and redemption. eUSX is designed to function primarily as a decentralized synthetic representation of the euro, which can be used in lending, borrowing, and trading within the Solstice environment. The project also hints at future integrations with broader DeFi ecosystems, offering the possibility that synthetic euro liquidity could be used across multiple chains or platforms. Still, these integrations appear to be in early development stages, and the extent of cross-platform adoption has not yet been established. Despite the clarity of the conceptual design, there are transparency gaps. While the documentation explains the basic minting mechanism, it does not yet provide full technical specifications for collateral pools, liquidation processes, or long-term monetary policy. Token distribution details for eUSX, such as supply limits, issuance schedules, and governance rights, are not fully disclosed. The project does not currently provide a detailed breakdown of its collateral sources or auditing procedures, making it difficult for observers to evaluate the risk profile of the system. The Solstice team presents the project as part of a broader vision to create decentralized financial tools that do not depend on fiat banking systems or centralized issuers. This philosophical approach has grown in popularity among users who want currency exposure without the custodial risks associated with centralized stable coins. However, synthetic assets face their own structural challenges, including the need for deep liquidity, reliable collateral pricing, and well-tested liquidation mechanisms. The long-term stability of eUSX will depend on the system's ability to maintain adequate collateral buffers through market cycles. eUSX is still developing as a market asset. Current trading volumes and exchange presence remain limited, which is common for newly launched synthetic tokens. Broader adoption will depend on the growth of the Solstice platform, expansion of collateral options, and integration with other DeFi protocols. The project's roadmap suggests future enhancements to the user interface, collateral management, Oracle infrastructure, and multi-chain deployment, but the timeline for these developments is not fully detailed. At this stage, Solstice eUSX should be viewed as an early-stage synthetic euro token backed by an emerging decentralized derivatives protocol. Its design philosophy focuses on providing euro-denominated value without centralized custodians, but its ultimate viability will depend on collateral strength, transparency, and platform adoption. As with all synthetic assets, users should remain aware of the structural risks and monitor ongoing developments closely. For deeper insights into meme coins and emerging crypto projects, visit Crypto in Black and White.